Welcome, everyone. My guest for this sponsored episode is Brennan O'Connell, Director of Data Solutions at Optimal Blue, to talk about the significance of rate lock data and how lenders are using that data to their advantage. Brennan, welcome to the podcast.
Hey, morning, Sarah. Thanks for having me on. Good to be with you.
Great to have you on. And I am very excited about this topic because we know how important rate lock data is, and Optimal Blue, obviously, product and pricing engine that we've referenced for a couple of years now, pretty extensively. And so I wanted to talk about the first topic is like, what's the significance of rate lock data? Everybody's very focused on rates right now, understandably. And rate lock data, I feel like, has some really important things to tell us.
Yeah, it's a great topic, Sarah. We probably don't, we're so used to talking about what the current event is, and we probably don't spend a lot of time taking a step back and talking about, hey, like what is this data that we're leveraging to track the market? HousingWire does a great job, and we put out a number of reports. HousingWire picks it up and runs stories on it, so we certainly appreciate the partnership. The rate lock data, though, you kind of touched on it, comes out of Optimal Blue's product and pricing engine. So Optimal Blue, most folks know us as a software company, and that's absolutely right. That is our flagship product offering, is software based. But because we have such a large market share, you've got a lot of data coming out of that software system. And one of the primary pieces of information that we capture, particularly on our product and pricing engine, is the rate lock event. So that's the point in the mortgage transaction process when a lender and a borrower agree to a rate, typically around the time of application. Most listeners presumably know all of this, but for any of those that don't, that's the point when the lender is committing a particular rate to the borrower, so that from the period of application or from rate lock until closing, that borrower is not subject to changes in interest rate. But what makes that data point extremely interesting is when it's occurring in the process. So if you think about when a loan is closing today, a good example, I'm actually refinancing my house. I was one of those unlucky people who locked in a rate at 7%, got rid of my 3% and upgraded to a 7 in the last couple of years. So I'm finally getting to refinance and was able to lock in at a rate around 6. Rates are something like 50 basis points higher now for conforming products. So the loans that are closing today, I'm going to be closing next week, those loans are not representative of where market rates are. In order to know where market rates are, and in order to know where market activity is, and when the decision-making process is actually happening, it's much better to look, or much cleaner to look earlier in the process. So around the time of application, or in the case of our data, at the time of rate lock. So my rate lock around the 6% that I got, that was a much better indication at the time of where rates are. And so the rate locks today, being 50 basis points higher, that's a much better indication to lenders, to borrowers, to the market at large of where market activity actually is. So that's the kind of unique piece about rate locks, is that they're occurring so much earlier in the process when the decisions are actually being made.
Well, and I also think that we are in such an unusual market over the last couple of years. So say, for like 10 years after the great financial crisis, I mean, rate locks were important, and, they were important to the people doing the loans and getting the loans. But I mean, it wasn't the kind of stress that maybe people feel right now. Maybe you felt right now, where it's like, it could be a pretty big difference week to week, day to day. And so that rate lock data, that rate lock experience is super important.
Absolutely. Yeah. Volatility makes that timely tracking just that much more important. It's funny, the most great ideas for vendors come from their clients in one way or another. So Optimal Blue has had this rate lock data. The company's been around for 25 years. We've had this rate lock data for the entire time, and we probably hit a representative share of the market in say 15 years ago or something like that. But about 10 years ago, the Federal Reserve came to Optimal Blue for some of the same reasons you're talking about, Sarah. They were wanted to monitor the market obviously the Federal Reserve, as much as anybody, needs to know what's going on in the mortgage market, along with many other macroeconomic factors. But that's certainly a key one that they like to track to understand the implications of their policy, the implications of other government interventions in the market. So the Fed came to Optimal Blue and said, hey, can we get access to this rate lock data? We know that you're processing a representative share of the market in terms of rate lock data. And like I said, that happened about 10 years ago now. And so I kind of think for Optimal Blue, that was sort of like the infancy of our sort of data business, or the infancy of when we started bringing data to the market. So we started delivering it to the Fed. And then over time, we've just continued to add data products and reports to do, just like you said, help provide that visibility into the market, timely visibility, so that particularly during volatile periods, certainly like what we're seeing now to some extent, absolutely during the pandemic, we started releasing a number of reports during the pandemic and released some new products during the pandemic. Because of that volatility, it was so important. It was very clear to us that this was a point where we should be interjecting ourselves and trying to do the best that we could to provide transparency to what was at the time, volatile, scary market to many folks. So just continuing to provide additional information into the market. And I think it started with the Fed, and we've just seen kind of a continuation of that trend now, where now it's lenders that are interested, it's media like HousingWire that's interested. We've got think tanks that are reporting on this information. So the market collectively that's watching housing is really narrowly focused in on this.
So, you mentioned several times that you have, the market share you have, or the number of locks that go through your system. What does that look like? What is that number?
Yeah. If you go back to when the Fed first acquired the data from Optimal Blue and started tracking, monitoring the market, it was probably in that 15 to 20% range. Today, we're more than double that. So Optimal Blue as a company, as a software business, has continued to grow to the point where now we're capturing roughly a third. It depends on kind of the denominator you use, but it's somewhere between a third and 40% of the market of new U.S. residential originations are getting locked in our system. So that allows us to do a number of different things. As I mentioned, from a product perspective, we've continued to grow the product set that we're able to offer. We have summary level data on this large representative data set. We have loan level data. Another just general trend from clients that we've seen is folks saying, hey, a graph is great, a summary is great, but we now have data analytics internally. Maybe we use Power BI or Domo or Tableau, and we want to work with the data ourselves. And so we've got loan level products out there. I mentioned reports a couple times. One of the key ones I'll do sort of a shameless plug for is our Market Advantage report. HousingWire does a wonderful job picking this up on a monthly basis. This is one that we started during the pandemic. And we take this rate lock data, the third to 40% of the market, and we put together a handful of key statistics around production rates, and then some geographical information too on your top 20 MSAs. Put that out on a monthly basis. And we actually launched an associated podcast with it. So getting a lot of use of these new headphones here between this podcast and our recently launched podcast. It's myself and then our director of PR, Olivia Delancey, run a podcast each month where we're talking about the rate lock data and then also bringing in guests. So we've been lucky. We had Joel Kahn from the NBA join for our first one. And then many folks in the industry probably know Dave Savage, CEO of Mortgage Coach. So great, interesting folks who we bring on. We talk about data, and it's really been great that we can deliver that value to the market in this new format. And it's nice because we're not charging for it. Go ahead and follow us on LinkedIn. Go to our webpage. The data's out there. The podcasts are out there. It's all free. Please take advantage. We spend this time putting these podcasts together.
Sure. No, that's great. Let's talk about some of the use cases for the data. So, one of the things that strikes me right away is, as I said, like people are pretty obsessively checking rates all the time. The thing is, lenders, real estate agents, everybody, the thing is about rate locks is this was the actual rate that was used. So this is not a promotional rate. This is not the rate that was like, if you're in a very high bracket and you're, and you're the cream of the crop, this is like the actual rate that was used. And I think that's where so much of the value comes in, is it's not some idealized rate. It is the one that was actually used for the loan.
Yeah, absolutely. Not promotional. It's not the rates you're seeing out on folks' websites, not the marketing rate, if you will. It's the actual, as you mentioned, the transaction or the rate lock that is occurring between the borrower and the lender, that the lender is actually committing to that borrower for the collateral or for the loan. The use cases are interesting. Certainly pricing accuracy, there's an obvious use case within capital markets. So the folks who are really responsible for setting pricing strategy at lending institutions, whether it be an independent or a credit union or a bank. You've got, we was down talking to a great group in Savannah yesterday or a few days ago at a Curin conference, and a lot of credit unions down there, really thoughtful folks when it comes to the pricing and offering better products to their members, but they're taking advantage of data. They want to understand what are the available products for my members in the markets that I'm serving. And by having real transactional data, you're going to get the best sense for what your borrower actually has available to them. So not just what's on a website or what's being marketed, or even, a summary level. Hey, this is the average rate in the market. At this point, the loan level pricing adjustments that impact virtually all borrowers are making it so that each of our rates are going to look pretty different, right? Our characteristics, our scenarios are very different, and so the rates that we're all getting, they're all pretty unique. They're all, we're all sort of rate lock snowflakes. So capital markets and pricing strategy is really an obvious use of this type of data. The other one, which again, talk about some of these general trends that we're seeing from our clients, is a move to get the loan officer more information so that they are in a better position to be a financial advisor to the borrower. And when I say that, it's a lot of the same information that capital markets might be using to set pricing or try to improve market share. The loan officer is taking that information and it's allowing them to have a really educated discussion with their borrower. So they're able to see what are other borrowers that look like you, that have similar scenarios, similar loan level pricing adjustments. What are they locking in right now? Not just, hey, I know what the bank or the credit union down the road is offering. I can actually see, hey, there were 100 locks in your geography yesterday that look kind of like you, and here's exactly what they got. And so let's talk about that. Like, let's talk about what your options are. Let's talk about how, me as your lender that you're sitting across the table from right now can offer something that is in the range that is competitive with what's sort of available to you broadly. So I think we think about the use cases that it's sort of like this capital markets use case, and then absolutely on the production side, I think we're really excited about it. Certainly loan officers are one of the key stakeholders in the use of the Optimal Blue system and the use of the Optimal Blue network. Those folks are starting to get more involved with data. I think it's great. A lot of folks championing loan officers in that role. I mentioned Dave Savage, the podcast that Dave's on with us is going to drop here, I believe, in a couple of weeks in the second week in November. So much good content coming from Dave about how mortgage lenders can become mortgage advisors, and how you really shift that narrative in the borrower's head from somebody who's maybe just a transactional relationship to somebody who's truly an advisor, and data is such a key part of that.
Well, and I think it's you're switching that idea, the mindset in the loan officer's head too, right? Like if you got into the industry and you were sort of an order taker, right, for refi. I mean, we've been out of that now for 18 months, 2 years, and so it's like that the more data you have, the more information you have. It's like power for you, right? Like that is your selling point to this borrower, compared to like whatever they can like click on in the internet or, get a call from somebody or whatever. So it's like the more of that they can have, and the more that relates to, making the borrower feel really good about what they're getting and being educated about it.
Couldn't agree more. I'll give a shout out to the loan officer that I've worked with on my last few loans, a guy from A Plus Mortgage. His name's Rich Zelensky. I'm going to have to send him this podcast here afterwards. It said I'd give him a shout out. He's incredible. He does exactly what you'd hope your financial advisors, your insurance advisors, and in this case, your loan advisors to do. They have discussions with you. There's a lot of back and forth. There's not forcing of a transaction. It's a lot about providing input about what's going on in the market and helping not just force you towards a transaction, but helping you guide a really critical decision. We don't get that many mortgages in our life, and so it is something for borrowers that I think it creates some anxiety when you're approaching it. And so to have that relationship with your loan, I'm going to say loan advisor now. They're not even loan officers, they're loan advisors. And that's, Rich does it. Obviously, I work for Optimal Blue as the director of data. This is what I do all the time. And I still absolutely value the input Rich has. He every time we talk, he brings up something that I wasn't necessarily thinking about when it came to my own financing. And so that's the model. And when you start doing that, then you're going to find that folks are not just making decisions based on rate. They're making decisions based on that relationship, because there's more to it, right? They're thinking, well, it's not just about whether or not I can get the absolute best rate. Certainly that's important, but you can give yourself, as a lender and as a loan officer, a competitive advantage by providing real value that people would maybe be less likely to shop you, because they know that they're getting value from you, that they can trust you, that you're a guiding light for them in this process.
I also love the idea of so I've bought a couple of houses I've moved quite a bit in the last couple of years. And so I've had the same sort of situation where it's like the fact that a loan officer can say, I can see what rates have locked in your geographic area, or maybe in your, with your credit score. And with this, it makes the borrower understand that this isn't just pulled out of thin air. And there's just this credibility of the rate that I'm getting is based on something, and not just, some things that feel like beyond everyone's control if you're on the borrower side.
Yeah, absolutely. Like somebody on Wall Street is dictating your rate, and there's nothing really you can do about it. No, it's I think having the ability to bring that data into the conversation creates a lot of empathy between the loan officer, the loan advisor, and the borrower. And just like you said, I think it does a lot to get borrowers more comfortable with a transaction that doesn't occur very often in one's lifetime and can be a stressful one.
So we're looking ahead at, we all thought we'd be in a different interest rate environment when the Fed started cutting rates and then rates went up. That's been fun for everyone, and just so stressful, right? But we're in this different environment. We hope, though, that 2025 has some relief there, some relief coming. It could come even quicker than that, depending on the labor market. But how at Optimal Blue do you kind of look at what's coming and say, this is how we're going to be ready to meet that moment for our customers?
Yeah, it's a really good question. So a couple thoughts. We look at what the agencies put out, and we certainly kind of keep an eye on it. We also track our own real-time data. We are really encouraged to see that, and we'll see what comes out of October. But looking back at September, we were really encouraged to see a good trend of refinance activity. And then actually, for the first time since spring of 22, the purchase market had turned. So you saw a year-over-year increase in purchase lock counts. And that's a key metric that we track. That's sort of a bellwether for whether or not the market is turning. It's not as volatile as refis. It's year over year, so that it's kind of clearing out the impact of seasonality and giving you a really clear indication of, hey, how are we doing year over year? And so there's a lot of things that we're seeing that we have reasons to be optimistic that production is going to improve in the future. That's our hope. Certainly, I think everybody feels the same way. In terms of what we're doing to support our clients, and it's really, we focus on profitability. That's kind of Optimal Blue's lifeblood, is how do we make our clients more profitable, and how does that profitability ultimately lead to more home ownership, or more affordability for clients in the mortgage market as they look to achieve the dream of home ownership. So for us, technology is a way for clients, I think, lender clients, to scale up and respond to changes in market in a way that they may not necessarily be on that sort of personnel pendulum that we see in the market. So rates go down, volumes go up. Okay, we need to hire a lot of folks really quickly. Maybe we have to pay pretty significant salaries in order to get those folks in the door. And so some of our profitability is going to be hurt as we're doing that. Conversely, then obviously rates go up, production goes down, and you run into the situation where you have to make unfortunate cuts. I think technology can smooth that personnel pendulum, and Optimal Blue absolutely is, with a lot of the automation tools that we put into both our pricing engine and our hedging systems. Our goal is really to smooth that out so that your personnel can scale up and down with the market, and you don't run into that. Really, it's a tough position to be in. Hiring's hard, and firing's worse, right? So we want people to avoid having to do that, and so the automation that we build into our software products is really meant to do that.
Well, and that's the hope of technology, right? That is what people are buying technology for. Of course, it does very specific things, but like overall, it's supposed to make a difference to the bottom line. It's supposed to help smooth the process, make it less expensive, make it more efficient. So that would be delivering on what everyone hopes that they're getting.
Yeah, and I think we've got a pretty good track record of doing it. We can always be improving, but I know we're excited about a lot of the stuff that we've got coming out over the next 6 months. Really excited about a user conference that we're reintroducing into the Optimal Blue annual list of events in early 25. So really excited about that, and continuing to bring in the client feedback, because ultimately, we talked about it earlier, it's the client feedback, taking that, synthesizing it across these hundreds or even thousands of clients that Optimal Blue already serves. How do we synthesize that and continue to figure out what are the ways that we can make their lives easier?
Well, Brennan, I appreciate you coming on our podcast. I know you have your own podcast, so thanks for being on mine and giving us some of this insight, telling us about the Market Advantage Report. I think that's a great thing for people to look at and avail themselves at. As you said, that's free. So thank you for coming on, explaining the significance of rate lock data and what we can look forward to.
Yeah, absolutely a pleasure, Sarah. Thank you to you and the HousingWire team for having me and Optimal Blue on.